Hi, this is Sandy Laycox, Editor-in-Chief of Leaders Edge. A few months ago, the Council formed a task force to see how we could help business leaders as they begin to return to their physical workspaces. The Council has delved into the topic from many angles, from physical safety to trust in leadership to how to redesign your office. As an offshoot of that, we began to think about how Leaders Edge could complement that work. The result is our new podcast series, Industries at Work COVID-19 Edition. In this series, we'll explore different industries as they continue to work through the pandemic or begin the process of transitioning back into their physical workspace. We'll hear from a variety of stakeholders interviewed by members of the Council's task force team. Our first podcast features Terry McCann, President and Managing Director of RT Specialty Chicago. Terry directs RT's construction practice and is talking with the Council's Director of Market Intelligence, Rob Boyce. Because many construction projects were deemed essential at the outset of the COVID-19 pandemic, Terry discusses how the industry quickly changed its practices to remain at work safely during the outbreak. He also talks about pricing impacts, carrier responses, and what the future of construction may bring. Let's give it a listen.
Good morning, Terry. Thank you so much for joining us today. I hope you're doing well.
I'm doing great, Rob. Thanks.
All right, let's jump right in. You've been in the industry for over 20 years now and working as a director for RT Specialties construction practice for exactly 10 years now. Clearly, we are in unprecedented times. Just to start off, can you please briefly describe COVID-19's impact on the construction industry, and more specifically, how liability and other related coverages have been affected in the midst of this pandemic?
Sure. Thanks, Rob. We've seen an incredible growth in the construction industry the last 10 years. Coming out of the recession, there were so many projects and whether infrastructure, residential, commercial, that were put on delay in the early 2000s, and coming right into around 2010, we've seen just robust activity catching up. So the last 10 years have been incredibly active. So what we are doing is managing, some uncertainty in the midst of those projects. We have so many complex projects and all over the country that are in the midst of the construction, and they've been, put through an extreme challenge of navigating supply chain, worker safety, and job site issues, as well as timing issues, for their customers, and managing that the past 60 days has been really incredible.
Well, you mentioned in a previous conversation, while some job sites have been forced to slow down, others have been working with a breakneck speed due to not as many drivers on the road. Certain areas like airports not having very limited capacities, allowing these construction projects to really get ahead compared to where they would be. Could you elaborate on that, please?
Sure, Rob. Early on in the COVID crisis, there was a lot of uncertainty whether construction sites would be allowed to remain open. And the vast majority of jurisdictions and municipalities have deemed construction as a critical business or essential business. And we've seen them stay open for the most part. What they've had to do is obviously change their usual routines as far as PPE, safety, and different job site security measures around the virus. But one thing, as well as the amount of workers available, but several things have been positive. From recent conversations with a large contractor, one on a large concrete high-rise, they said that they were able to really pour a lot quicker than they would have, which has allowed them to complete many floors ahead of schedule. So that is offsetting some of the challenges of material procurement that they've faced, but there's been some highlights, and it just shows to the adaptability of the construction business to control what they can control, and what they can't control, work around.
Mhm. It's great to hear that there's a silver lining there. So you mentioned in a previous conversation that many of these projects and the forecastability to complete this project in a certain timeline was fairly aggressive, and in some instances, the pandemic made it nearly impossible to meet those timelines. How has that impacted markets and underwriting for the insurance and reinsurance industry when it comes to construction and some of these ongoing projects?
Yeah, thanks, Rob. Um, what we've seen over the past 10 years is projects becoming increasingly more complex, whether it
Mhm.
be an infrastructure project, a bridge, a dam, a tunnel, um, airport, transportation infrastructure. All of these projects are becoming more complex, as well as um, condo, high-rise condo buildings to apartment communities. All of them are becoming more complex. So I think that those timelines were always challenged, because the costs of these projects have increased so substantially over the years. And what the
Mhm.
COVID crisis has done is obviously slowing down their ability to procure supplies, to keep people on the job site, has stressed out the market for a couple things. Carriers have written these policies, for example, 5 years on these project policies, and many of the markets can't accommodate a term over 5 years without some reinsurance approval. And the pricing of those projects from 5 years ago is nowhere near the pricing now, and there's a possibility that there's been some adverse loss activity on these projects. And there's also issues where some of the reinsurers or the carriers that were on those projects 5 years ago aren't in this space anymore, or not,
Wow.
writing the type of projects that they were on. So it brings some challenges for timing. So many carriers are able to handle that, and they've allowed the extra time, whether it be a year, 18 months, or something even shorter. But
Right.
some have not, and some of these projects were behind before the crisis, and this crisis obviously will highlight that. And in some cases, we've had to replace entire programs midstream, and we have done that, and we're doing it on a monthly basis, um, and rewriting these.
Yeah, very, very interesting. So, from the financial perspective, how has COVID-19 impacted, some of these contracts and projects? If an owner or a contractor is unable to make a payment of premium, or if the project has been delayed, what are their options and how is their coverage impacted?
I commend the insurance markets for working with the clients. We've had, from mid-March to now early June, we've had several occasions, Rob, where insureds have looked for flexibility on terms, whether it be audits or adding exposure, and or looking for extra time. And the markets have
Mhm.
responded in almost every case of accommodating those requests from their policyholders, within reason. And it has been, very enlightening to see, that
Right.
relationship flourish.
Have policies
So
changed at all when it comes to, requiring communicable disease exclusions and, the fact that COVID is, transferred in the air? How does that liability, has it changed underwriting at all?
yeah, there's no question that, a construction underwriter who's quoting a large practice policy or a large wrap up, was never underwriting to, a pandemic such as COVID. So, they're underwriting to premise liability of a job site or construction defect on the project. They weren't underwriting to, this virus. So we have seen, the vast, very large majority of carriers adding a
Mhm.
communicable disease to these policies, where necessary. We've seen some
Right.
that haven't, but it's becoming.
Well, given where we are in the economy and what we've seen over the past 3 or so months, have you seen any change in how banks, if they're becoming tighter on who they work with and how this impacts small, mid-size, and large developers when getting deals through. How's the activity been around that?
What we've seen is that, which is very encouraging. We've seen that, early on in March and early April, we have seen some delays in projects that have just needed more time to sort out or to start, for varying reasons. But the encouraging part is that we have seen many of the projects start, on time, the inception of new wraps. We have seen that. And keep in mind that some of these projects have been in the planning phase for years, whether it could be 3, 4, and 5 years, especially some of these more complex infrastructure projects. So we have seen those, start very close to on schedule, which is encouraging, most likely because that financing, has been secured, whether it be through a large private financing or public financing.
When it comes to, underwriting and, we're seeing some tightening in the market and pricing has been increasing, well prior to the pandemic. Have you seen any impact from the pandemic specifically on pricing and how underwriting is working? And you mentioned the combined ratio insurance over the past several years. Do you mind elaborating on that?
Well, I think, the market has been, you make an excellent point, Rob. The market has been, firming for, almost, I would say, the last 12 months. We've seen a firming in different classes of business, and we've seen that same firming in construction. Construction was probably one of the last ones to see some price increase. But I think what we see from the pandemic, Rob, is that it's accentuating and highlighting and accelerating what was already happening in our business. What we've seen is a little more conservative approach on pricing. We've seen a more conservative approach on limit offering. We've seen a little bit of restriction in coverages. In most cases, have the markets adapted to the needs of the insured? Absolutely. But we have seen some changes in regards to capacity, and that has also had a adverse pricing impact to the customer.
Right.
But if you look, most of the carriers that are in this space have had challenges with loss history. I mean, we're also coming out of a 10-year cycle of some of the most competitive pricing, ever in the insurance business. So, all those confluences of events are kind of coming together, and the shorter limits, the increased pricing, are having an adverse effect, on the customer.
Absolutely. So civil authority has been a big buzzword in the industry lately. And, if a job site or project is shut down due to civil authority, how are carriers handling waived premiums, or are they extending coverage for projects taking longer than expected? Have they been pretty adaptable?
Yeah, I've only had a couple instances of projects being shut down, and in those cases, the markets have been very accommodating in extending. And fast forward, those were somewhat short of shutdowns. It was a week or two at max. I haven't seen any prolonged shutdown in any jurisdictions.
So I know you work with a lot of contractors and risk managers specifically. So when reopening job sites, starting new projects, or even continuing current projects in the midst of a pandemic, what precautions have been taken to keep job sites safe and workers safe on the site?
Yeah, thanks, Rob. Have had many conversations with risk managers and contractors, via their requests in some instances to, extend projects or get some accommodation from the markets. And the markets have asked that question: what is being done to, keep the job site safe? And I give credit to these contractors. While many of them are local, they, procure supplies globally, and they were way ahead. Even December and January, they were keenly aware of the outbreaks in Europe and China and the challenges that that posed to their supply chain. So they really started their preparations at that time, and many of them articulated that they had meetings, on how they would move forward and adapt. And most of them have been operating with, additional PPE, whether it's gloves, masks, and they've been working together with their subs to make sure everyone on the job site has enough materials, increasing social distancing when arriving at the job sites, limiting how many workers in the hoist, and in some cases to compensate, adding another hoist to the job, which increase costs, but it'll also, allow for that additional level of safety. Staggering of shifts and more, cleaning areas on the job sites where they could wash hands, and in some cases, temperature checks upon arrival of the job, and monitoring that so not to, you know, unknowingly impact any coworkers. So they've taken quite a few precautions.
This is great to hear the precautions are being taken, and I think that could be said about very many industries. But on forward looking, as the economy, as we attempt to rebound, all we've lost in the past few months, and both across the private and the public sectors, regarding the financial implications of COVID-19. What are some opportunities that could arise post-pandemic, regarding large infrastructure projects, public-private partnerships? Are you already working on some, and what do you expect to see in the next 5 to 10 years?
Well, unfortunately, I have no crystal ball. With what's been going on, it's quite an unprecedented past few months. But the activity's been so robust over the last 10 years, and what I do know is that so many complex projects have been sketched and are being planned, and there's definitely a pipeline for the future. If some of those are delayed or how many are able to start, I don't know, but I think that some of these projects, and what I hear, the costs would be greater to delay them or not do them at all. So I feel pretty optimistic that between these developers and municipalities, that they want to keep going with these projects as much as they can, because of the cost to not do them would be greater. Right. And they've been penciled in, and that financing has preliminary plans for financing have been done. And I don't think the country wants to see a mass exodus of construction workers either.
Right.
Like happened prior to the recession. That was a challenge, bringing those construction workers back to the business. They don't want to lose that.
Yeah, I can imagine. Thanks so much, Terry. And we'll end on a big picture question, about lessons learned. And as you think about your experience over the past few months in regards to managing the challenges associated with the current health and economic crisis, what is something that you plan to start doing after the pandemic, something that you would stop, and something that you will or should continue doing? This can be personally, professionally, or industry related.
Yeah, I think that, as a wholesale broker, we've been always conditioned to address the needs of the clients and the customers immediately, because most of the requests and most of the needs have, a significant immediacy to the challenge. And I think what it shows is that, don't take time for granted. I think that, when faced with challenges, we kind of have to address these, on quickly. And
being in the E&S market, is kind of the last option for coverage in many cases. You have to be on your feet, and you got to be malleable and service your customers in the best way possible.
Yeah, and we've seen that what is relevant. It's always been the case. What is relevant today may not be available tomorrow, and I think that's been highlighted even more. So handling things, being prepared, and not procrastinating are key.
Yeah, and it sounds like the market's done a great job, pre-COVID and during the pandemic. So, Terry, we really appreciate your time today. There's some great insights, and we look forward to hearing from you more and keeping in touch. But thanks for joining us for this podcast, and I hope you have a great afternoon.
Yeah, thanks so much, Rob.